Pankaj, we're looking forward to an important period right now, and the budget, among other things, would be the next driver for markets as well. I know this is a government that looks at reform outside the budget as well, but what are you hoping to hear and see from an India perspective, from an economy perspective, from the budget?
So I think nothing, wrong done on taxes. I think will be a good news for overall markets. I think one thing which government needs to really think about is the buyback tax. Today, buyback has become virtually non-existent. We believe that there's a large amount of capital which is stuck, which is not either going for capex or not getting returned back to the shareholders. It's sitting in funds, small liquid funds or bank deposits or whatever, and that multiplier impact is not getting created. So I think buyback tax, which the companies use to distribute the excess cash, I think she should be reviewed. It's a large amount. If you look at all the IT companies and cash-rich companies, either they can deploy that back into their business at or the capex, or they can distribute. I think that is not happening. That one thing one should be looking forward, and something to spur the momentum back into the private sector in terms of capex side. I think these are the two important drivers. Government did a lot last year in terms of consumption. You saw the tax rate cuts in the last budget, followed by GST rate cut. So I think government has trying to revive that consumption basket alongside, I think, manufacturing, because don't forget that the government capex will not rise at the same pace which we saw in the 4 years post-COVID at 33% CAGR. I think last year we saw it's just increasing by 8-10%, and probably that would be the path going forward in the next 2 years. So I think private sector needs to be really pulled up in terms of capex visibility for the next few years for the economy to sustain the growth momentum. So these are the few things I would look forward for.
But Pankaj, how will that really happen? I mean, in terms of government spends, at least, the space has shrunk after what they did with income tax and then with GST.
Yes, so I think there are 2-3 avenues. I think a large part of disinvestment is one thing which we have missed for the last 5 years in a row. Every year we come up with a number. This year was a smaller number, but still we are running or trailing behind that number. So that is one area where we can get substantial amount of revenues in terms of disinvestment. The second part is the RBI dividend. I think that number could be a decent number this year as well. And the third part is that once the nominal GDP growth starts to inch up, the top line growth of corporate India also inches up, which means higher and better tax collection. So India needs some kind of inflation, which probably we have not seen for a long time at the producer level. I think with commodity prices going up, that should also be okay. But this year, as a house, we are looking at about 2 to 2.5 lakh crores of revenue shortfall, which should be bridged by higher dividends, maybe some tinkering on excise duty from the OMC side, and disinvestment if it can be hurried up for the next 2 months, and higher dividend from RBI. So that's the shortfall bridge which is there right now, about 2.5 lakh crores, which can be bridged by the government in the near term. But from a medium term perspective, I think finally it's growth which has to lead to higher tax collections.